Good morning, everybody. It is Thursday, April 21st, 5:51 a.m. Central Time as I speak here. July corn futures down 3.5 at 806.5. December corn is down 4 3/4 at 743 3/4. July soybeans down a quarter cent at 1716 3/4. November beans down 2 at 1527.5. July Chicago wheat down 7.5 cents at 1090. July Kansas City wheat down 7 at 1162.5. July spring wheat is down 2 3/4 at 1169.5. If you guys are listening on the podcast, as always, appreciate it, guys. Leave me a rating or review on that Apple app if you have not already. If you are watching on YouTube, make sure you subscribe to the channel. We're only a couple hundred subscriptions away from my long-standing goal of 5,000. Like these videos, leave me a comment. If you need some additional assistance or information from me, go to my website. It is www.standardgrain.com. Check out my premium subscription service. I send my premium subscribers a ton of information every single business day. My morning email goes out before 6 a.m. Central Time. That email includes every overnight headline you need to be aware of, a ton of weather information, charts, graphics. My subscriber-only videos are part of this package. I did one yesterday where I did kind of a review of the outside markets, talking about grain marketing every single day would be very monotonous. So I talk about outside markets from time to time. We ran through the energies, bonds, gold. I did kind of an editorial on fixed income and the bond market toward the end of this deal yesterday. So if you guys are interested in this premium deal, give it a shot. It's $50 a month. You can cancel it at any time. No other fee, no other obligation. Nobody will try to sell you anything else, I promise. China says its soybean production will increase by nearly 26% this year. The Chinese Ag Ministry estimates that planted soybean acreage will increase by 16.7%. Total production expected near 20.6 million metric tons, which would be up sharply from 16.4 last year. Now, to put this all in perspective, USDA projects that total Chinese domestic consumption of soybeans will be about 109 million metric tons this year. So the country will still be highly dependent on imports, even if a 26% increase in production is realized. In the current marketing year, which ends on August 31st, China is projected to import 84% of its total soybean needs. And that percentage could drop slightly if China's plans to increase production are realized, and that's probably a big if at this point. So China, I think, would very much like to be less dependent on the U.S. in particular for imports, but this is not something that's going to happen overnight. And even if their lofty plans to increase production by 26% are realized, they will still be importing beans from the U.S. next year to a significant degree in all likelihood. Russia's Vladimir Putin has claimed control of the Ukrainian city of Mariupol. Putin says that he has liberated the city, aside from the steel plant, which has been ordered to be blockaded. Apparently, at this massive steel complex, there are about 1,000 civilians and 500 wounded soldiers stuck, according to Bloomberg. Zelensky said last night that Russian forces continue to push forward in Ukraine's east and in the south. President Biden is set to announce plans to send more military aid to Ukraine, I believe, this morning. One source indicated that another package worth $800 million would be approved. I believe they've approved to this point $2.6 billion in Ukrainian assistance from the United States. There's still some debate, or a lot of debate, regarding agriculture in Ukraine. The country's ag minister said that spring plantings will fall by only 17%. I think just this week, a UN official said that spring plantings may decline by a third. Winter wheat harvest also in question. Shipping and storage remain obstacles, in addition to issues on the farm, which include, fuel, fertilizer, labor, all of those things. So still a very, very messy situation. This thing is nowhere near being over. Rains move out of the eastern Corn Belt this morning. There's still some stuff lingering over parts of Ohio and further east. Over the last 72 hours, a lot of the Corn Belt has seen at least some rain. The map on my screen here is what's expected over the next 7 days. Iowa's going to catch some more rain, northern Illinois, northern plains, North Dakota, parts of Montana, a little bit of South Dakota. But when you get into next week, early next week, you're going to see a kind of a dry spell here that occurs for several days. better part of a week, really. And I'm not sure what sort of planting activity will take place, but you look at your 6 to 10 and 8 to 14 day maps, and below normal precipitation expected for a lot of the Corn Belt in that 6 to 10 day period. Eastern Corn Belt in that 8 to 14 day period should see below normal precipitation. Now, I know that a lot of these areas will need time to dry out. I know the temperatures are less than ideal, but you should see some sort of uptick in corn planting here next week. That would be my guess. The December 23 corn contract finished unchanged yesterday. Prior to yesterday, that contract had closed higher in 21 consecutive sessions. The D's 23 contract gained about $1.15 per bushel since the end of February. It trades in the 670s this morning. I'm not sure exactly the reason for this quick and steep run-up in prices. I don't know if it's because large speculators are just attracted to a cheaper contract, or perhaps the market is discounting extended issues in Ukraine, Russia, which tie into fertilizer, exports. It's impossible to discount this war in Ukraine. It's just impossible to analyze its impact on everything from fertilizer to corn exports out of the Black Sea, all of those things. So the market is reacting to that and pricing in an extended war or conflict or issues here, disruptions, all of those things. And could the market be wrong? Yeah, it could be, but it's just not taking any chances here with this run-up. U.S. ethanol production declined last week. Weekly output 947,000 barrels per day. That was off almost 5% on the week. Production has declined for 4 consecutive weeks. It's running near normal or slightly below normal seasonal levels, I guess. Some plants may be doing some maintenance work. Ethanol stocks are declining, and this is a good thing for corn demand and generally speaking that we're using ethanol. This was a 3rd consecutive weekly decline in ethanol stocks. We're still at the 2nd highest level on record seasonally in terms of stocks. The data suggests that ethanol exports being readied for shipment, thus the decline in stocks. Production margins are positive, generally speaking, around the Corn Belt when you look at spot prices of corn, ethanol, DDGs, inputs, all of that stuff. We do have an export sales report this morning at 7:30 a.m. Central. For the current marketing year, corn sales expected 950,000 up to 1.5 million. Soybean sales expected 300 to 1 million. Wheat sales 0 to 350 expected. Remember, guys, May grain options expire tomorrow. Be sure to take a look at any remaining open positions. Had a nice trade in the cattle market yesterday, sharply higher in the live cattle, higher in the feeder cattle market. Not a ton of cash trade, mostly 140, but some scattered stuff. The boxes were lower. In the outside markets, things are fairly quiet. The U.S. dollar is lower. The S&P's up 35. The Dow Jones up 225. Bonds off a little bit. Gold's down $10. Crude oil is up about 80 cents, sitting around 101 or 102. Everybody have a great day today. I'll talk to you guys on Friday.